Welcome to Episode 7 of the Maveric Banking Edge podcast series. Today, we have Ashutosh and Annette, seasoned CX experts, hosted by P. Venkatesh, Director of Thought Leadership at Maveric Systems, to cover our latest report on strategic digital marketing insights for customer retention.
Welcome to the Maverick Banking Edge Customer Experience podcast on strategic digital marketing insights for customer retention. And I have with me, like I had in the previous podcast, Annette Franz, a thought leader, a trade body promoter, author, and a leading light on the customer experience, and who has been championing this much before it became a fashion and has been leading it for over 3 decades. Annette, thank you for being in this session like you did in the previous one.
Thank you for having me. And you scared me when you said 3 decades. That just sounds like so much longer than 30 years. I don't know.
We'll go reflect back, Annette. Many people don't reflect back what distance we have traveled.
Exactly.
Very nice, very nice. And I also have, like we had in the previous session, Ashutosh, who has been a developer and a technologist on the customer experience front, and who has done a lot of work on marketing, and then subsequently in the last 10 years has been focusing on customer experience. And between last time and this time, he has also become an author and a podcast organizer now. So welcome on board, Ashutosh.
Pleasure being on the session today, PV, with you as well as Annette, and looking forward to the conversation.
Thank you. See, Annette, I'm just looking at the title, Strategic Marketing Insights for Customer Retention. Okay, for digital marketing for customer retention. Now, what are the drivers which is making people to look at customer retention more importantly now? And how different are these drivers from anything in the past?
Yeah. Well, I think it's it sounds crazy, but as the world turns, so evolve our customers and their expectations. And you have to think about, some of those things that I put under the category of as the world turns, right? There's a lot happening in the world today, especially when it comes to financial services, interest rates, the money supply, the geopolitical tensions, the cybersecurity issues, things like that. Some of those things that we dealt with in the past, some of the things that are new to today, right? Cybersecurity wasn't as big of an issue or top of mind 50 years ago, obviously, as it is today, right? So one of the things that we have to look at is, well, how was the world different in terms of, geopolitical, the financials, all of it versus today? And I think the big thing that's different and is a reason to be focusing on, this topic today is that, number one, customer expectations have changed. Customers have changed, right? Products have changed. How we do things in the banking world and in financial services, very different from how things were done. And I don't know what time frame you want to put on that. I'll go back 50 years. It was, obviously very different than it is today. So I think that's a big one is that customers and customer expectations have changed, products and services have changed, and then the technology that we have today, it didn't, necessarily exist 50 years ago. People weren't mobile first 50 years ago because that didn't exist back then. So it's really important for the banking clientele out there to focus on what customers' expectations are and have that technology in place to facilitate and to help create the experience that customers are expecting today, which truly is mobile first. And that's something that is obviously very different from many years ago.
Understand. Annette, you're essentially saying technology has substantially changed and it has brought new dimensions to handle,
Yeah.
especially like the cyber risk. Customer profiles and expectations have
Yeah.
substantially changed, and therefore you are no longer dealing with the same set of customers.
Yeah.
Banking itself has changed very much.
Absolutely.
And therefore this triad is actually influences people to rethink on.
Exactly. I
Now,
mean, even the landscape, right? The banks are no longer your traditional banks, right? We've got fintech companies coming in, we've got digital banks, we've got non-traditional banking options, those kinds of things that have created a whole different landscape just in this industry. So yeah, absolutely.
so understand. So there is a more fragmentation of relationship,
Yeah.
and therefore more challenge to hold them together.
Yep.
I get that. But I was surprised, Annette, you didn't mention AI in that entire technology. You mentioned cyber risk. Is AI is also one of the elements influencing in this whole path?
Yeah, absolutely.
Yep.
Absolutely. I think there's an expectation now, and I think that I actually just read a report yesterday about the impact or about the importance of AI and customers' expectations around when they're doing their mobile banking or when they're omnichannel, they're looking for, obviously omnichannel capabilities that they have this expectation that AI is going to be a big part of the experience that they have with the brand because it is so it's it's everywhere today, right? And so I think that doesn't surprise anybody, and there is this expectation that AI is going to be a part of the technology that delivers and supports the experience they're having.
Very nice, very nice. And see, now coming into the digital marketing and customer retentions are concerned. As the outcome of managing these drivers. And two things come to mind.
Okay.
People have been doing digital marketing for a long period of time. And are we witnessing a leap in this change of drivers, which is making people to relook at how to market themselves? Second, have people focus more on new customer acquisition than retention, that there is a need to refocus on customer retention more than new customer acquisition at this point in time?
I'll start with the latter and then go to the former. I think acquisition over retention has been a thing in every industry, right? It's always been, we've got to bring more customers in, and it's easier to do that than it is to retain your customers. It's work to retain your customers because you've got to make sure that they're satisfied and they're happy and they're engaged and they're seeing the value that they hope to see and all these other things. Whereas with acquisition, wow, I can just go and I'll step outside this industry for a second, but free shipping and discounts and free this and free that and promotions and doing free toasters for your new banking customers. That was the thing back in the day, right? But those are the kinds of things that we're doing to acquire, and it's cheaper and faster, and it's more fun to talk about the growth than it is to talk about the retention, right? It's more fun to say, hey, we just got 10,000 new members at our branch this month, this quarter, whatever, versus, oh, you know what, we lost 10,000 or we weren't even able to retain 10,000, something like that. So it's way more fun and sexier to talk about acquisition than it is retention. So absolutely, it needs to be a bigger focus. And we need to take care of our people because we know that when we focus on keeping those customers, when we focus on that retention, and we do things that show that our customers are happy and satisfied and engaged and all of that they will ultimately become an extension of our sales force, right? They'll be out spreading the good word. They'll be out there helping other customers. They'll be expanding within our products, right? Not just using checking or savings. They'll move into our other product offerings as well, those kinds of things. And so it's more important. It's important, obviously, to bring customers in, but we should put a little bit more of a balance in terms of where we put our attention in terms of acquisition and retention. I know I said I'd do the latter and then the former. So the former, can go back and ask me that question again, because it was around, digital marketing's been around for a long period of time, but I'm missing the question on that. What was the question on that one again?
The drivers, which we went through, Annette.
Right.
See, if they had gradually evolved, people would have also evolved the digital marketing strategies. Has it actually changed, or there is a much more rapid change now in terms of a much more either difficulty or enablement to understand these drivers, which is making people to sit up and look how to organize themselves for digital marketing?
Yeah, I mean, I think the strategy had to evolve, and it had to evolve because if you look at the tech stack that's out there for marketing and digital marketing, it has evolved too, and it's evolved faster in the last 10 years than it did certainly in the 10 years prior to that, right? And so we've got to keep up with that, and we've got to keep up with in the end, customers' expectations as a result of that. We think that expectations are formed just by our brand, and they're not. They're formed by what other companies and other industries are doing as well. And so we've got to be able to keep up with the Joneses, right? Keep up with the Amazon effect, keep up with all those things that are setting expectations for our customers. And technology, while, when we define customer experience, we say that it's a tool that supports and facilitates the experience. It certainly impacts our expectations about what the experience is going to be like, because we know that technology, and when we talked about AI just a minute ago, we know how that can speed things up and it can automate, and I don't have to wait. And, all of those things that frustrate customers can now be automated or can be handled or facilitated through AI as well. So I think it's just that evolution in the technology and the speed of evolution, maybe not even last 10 years, the last 5 years even, has really driven companies to look at the way that they do digital marketing differently than they did, just 10 years ago.
Okay. Now, Ashutosh, coming to you, and you have put out a digital marketing framework, sort of, for people to address specifically on customer retention. Now, where is it stemming from? Is it because you find certain trends which are happening in the industry which could be harnessed for larger adoption? And is it because there are tools which are now available for us to look holistically and drive some outcome? So what are those drivers?
So fantastic. No, firstly, PV, I love the question because it's more of a why and for what for kind of question rather than what have you done and what the framework is about. So this is so important because without context, a lot of meaning is lost. So let me take one step back with your permission and take it from where Annette ended her explanation of why retention and why digital marketing, right? So if we look at the current global economic situation, every bank is struggling for profitability. There's a huge, immense pressure on net interest margins, net interest income, which means if the profitability has to come, every bank is now trying to seek options to earn more non-interest income. And the only place where the non-interest income would come from is most probably the value-added services being sold to the existing clients. And in that context, existing clients would be much better bet to sell value-added services to than the new clients because they are not even yet exposed to the banks. The existing clients would have at least an interest to hear out what value-added services there are. So retention clearly is becoming far more critical. Acquisition versus retention, as Annette rightly said, is a never-ending debate. But in the context of banking, it's far more pronounced given the current situation and what I just mentioned. Now, this poses a very peculiar problem in the current context and for banking. That yes, every bank is now chasing existing clients for proposing and pitching value-added services to shore up the profitability through value-added services. But there is the problem that now more than before, every customer has a relationship with several banks at once. They'll have a savings account with one, current account with another, credit account, loans account with another, investment account with another. So if you look at it, every bank is fighting for the same pie. So they're looking at a similar client pool. And especially when the banks are similar, in terms of their investment appetite, their offering, their overall profile, that problem becomes far more pronounced. Because if I'm a customer, for me, there is no distinction between one bank or the other. And if both are pitching me the same value-added services, which bank wins? That's a huge question to answer, right? And I feel this is where digital marketing becomes far more critical, because now the bank which is able to reach the customers fastest with the right message in the channel where the customer prefers to be communicated with the right communication and the right message, and continues to nurture the relationship in an ongoing basis, is probably going to have a much higher rate to succeed and win as compared to the other bank. So this is where, and all of the things that I just mentioned are clear outcomes which a digital marketing strategy and execution delivers. So I feel therefore digital marketing is far more important. And now that we have established in a way why retention and why digital marketing, there is another challenge, which is digital marketing is not one lever anymore. Within digital marketing, you have SEO, you have SMM, you have content marketing, you have CX, you have a world in itself. Now, if two banks are competing for the same pie, for the same offering, and with same investment appetite to invest in all these levers at once, they have access to all these channels, all the best practices, all the technology. As Annette mentioned, AI, digital is no more a differentiator in itself. It's no more distinction in itself. Everyone has it. So now if everyone has it, if everyone has the digital marketing channels, the key is not in the digital marketing channels itself, but rather in terms of which channel to use when, for what context, and how. And this is where we are proposing a framework, which is not a digital marketing framework as it is, but rather more specifically, it is a digital marketing mix framework, so that one can craft a very unique digital marketing mix with the right budget allocations to the specific channels which are relevant to your sectoral focus, whether you're into corporate, retail, or wealth, and in which proportion, your market focus, your persona focus, and most importantly, your brand promise. So we are tying it all into your brand promise, because otherwise market focus, persona focus, sectoral focus, all of this can still be the same between banks, but brand promise could be unique. And we are saying that, hey, what if we try the tying the digital marketing mix to the brand promise? Now, this is where the digital marketing strategy could be far more unique than any other bank which is treating it as a digital marketing itself. And this is where a slightly nuanced point is, not every bank acts on banking this digital marketing the same way. Some act on it in a much more holistic fashion than the others. Some are far more pointed and focused. So this digital marketing mix not only makes it far more holistic, which we are proposing that is a need of the hour. It's a must-have, that you need to be far more holistic than focused on specific channels. But additionally, we are also, through our mix, proposing what kind of mix it should be, what kind of proportions and focuses you should have within the channels, what kind of budgets you should allocate. And last but not the least, how should you tie it into the brand promise so that it's unique, it's differentiated, and you win in the intense competitive market that it is today.
Can I just add something about the brand promise there too? Because I was talking about customer expectations. That brand promise is another source of setting expectations for customers, right? So the brand with their brand promise can lead those expectations as well.
Understand, Annette. Ashutosh, it's been very nice you describing the context why customer retention is of greater importance today than at any time before, and also establishing how digital marketing can help in that exercise. And you touched upon the framework for briefly. I wanted to ask, what is in this framework which is different from what people might have adopted in the past? And how is this framework relevant to the context they are in today? And how it's an enabler?
Wonderful. So definitely one, if I may go back to a very old example that's often quoted in India, which is, if you try to break one stick, you can break it very easily. But if you tie in multiple sticks together, it will be very difficult to break it, right? And the simile or metaphor I'm building up is that if banks today try and work on digital marketing best practices by channel, then you are basically working with individual sticks. But the moment you tie in all the channels together, that's when you have a bundle. And then it's very difficult to break that digital marketing strategy. It becomes a far more nuanced, holistic, collaborative strategy that it is. So our first pivot in our framework has 3 distinct steps. The first step is to figure out how to tie that in, how to tie all these channels in. And in this very case, most banks and most digital marketing strategies today are focused on individual channels and best practices around them. Even if it means sectoral contextualization or verticalization, may be, but it's still with a focus on that channel individually and how it could be optimized from a best practices perspective. But what we have seen when we take one step back and look at it, what we have seen that there are several nuances to how that channel and how that bank works within the market, which is, we have seen that there are several influencing parameters like customer personas and preferences, regulatory compliances and their impact on what kind of content and digital marketing can be done. What is the revenue potential from the individual targeted clients that you have? What is the segmentation within it? What is the competition like? How intense it is within the landscape? What kind of technologies are being adopted by banks, by your competitors? And what kind of adoption exists in your clientele? How important is brand trust and loyalty for your clients to listen in to what you have to communicate and therefore trust it and then act on it? What kind of data is accessible, is available, what kind of data the clients are open to share, and how it can be leveraged for digital marketing? And last but not the least, how important is cost efficiency in order to drive outcomes? So outcome versus cost efficiency, how important is the balance for the specific context? And if these are the parameters that we have elaborated extensively in the white paper, if you look at these parameters, one realizes that each bank would have a different prioritization to these preferences and parameters based on their focuses, and the focuses that Annette articulated right up front in her answer to begin with, which is what kind of persona focus, market focus, offerings, technology adoptions that the banks has, what kind of market it's operating, and what kind of sectoral focus it has, whether it is corporate, wealth, or retail. We have seen that there's a sense of prioritization that could be templatized, that we could come up with a templatized recommendation on if you are a corporate bank or a retail bank or a wealth bank, or if you're a corporate first or a retail first or a wealth first kind of a bank, what kind of prioritization of these parameters you should have or you would have, and on what basis. So we established that in the first step. And the second step is, now that we establish these preferences or the influencing parameters of sorts, now we match these parameters with the digital marketing mix in terms of, given these priorities of the parameters, what kind of mix you should have if these are the priorities that you have. And this then results in a much strategically crafted digital marketing mix strategy. Wherein now you can say, hey, if I have an SEO, SMM, content marketing, email marketing, and other channels, what kind of percentage allocation it should have. And the third step then is, once you have that, it still can be same between two banks. So how do we add in a layer of differentiation? And that is where we say, now if you have a brand promise added into this mix, would it change the budget allocation? Would it change the marketing mix? And in which way? And not only that, we also say, within the individual channel of the mix, how that individual channel can be optimized given the brand promise that you have crafted, so that you have a far more differentiated digital marketing mix and individual channel strategy coming all together holistically. So that's a 3-step framework we have developed to summarize what kind of influencing parameters and priorities that exist. Based on that, what kind of mix should it be, what kind of budget allocation you should have, and now if you tie brand promise to it, what kind of mix you would end up having, and individual channel strategies that you would end up having. So it's a 3-step framework. And last but not the least, in our white paper, we have also showcased how you can monitor the success of this framework and continue to improve it, because we strongly believe in a continuous improvement, continuous development kind of motion, where you continue to listen into what's happening in the landscape given the framework, and then continue to fine tune it, because it's never exact configuration that you can achieve within the first attempt. You would have to continue to fine tune before you reach the optimum. And we have proposed what kind of monitoring mechanisms you could have, what kind of metrics you could track by channel, by mix, and then ensure that all of it leads to a measurable business outcome.
See, Ashutosh, it was a pretty long response to the question that I had. And in quite a simple term, or let me attempt, you're essentially saying that the bank should have an outcome either by business line or by product, which they expect to have, and see that for that outcome, what are the parameters that can get the best results, and map those parameters to which are the channels which are best geared to deliver them, and therefore allocate budgets based on those.
Yes.
And in addition, you're saying, while that could be a corporate brand promise or an enterprise brand promise, there is also a brand promise for each of those business line and the services or products, and therefore attach those brand promises along with your campaign in order to make it much more wholesome. Is that correct?
Yes. The only distinction I'll make is brand promise is at the brand level, in the sense that it needs to be standardized for the entire brand. And of course, the individual offerings, there should be commitment from those offerings which in a way align to the brand promise. So I'm just rephrasing what you said. I'm completely aligned to how you summarized it. Just a nuance that, brand promise is one, but the individual offerings commitment needs to be taken in as well. And we have definitely taken care of that.
Now, coming back to you, Annette.
Right.
What would be the key takeaways for the chief business officer or the chief digital officer or a chief marketing officer from this report?
Well, there's a lot. Ashutosh has shared such a detailed description of the framework and what's in there, but I'll try to narrow it down to like 3 to 5. How's that? I think given where we started at the top of the podcast, when we talk about the evolving economic landscape. So I think there's really an urgent need for banks to adapt to those evolving that evolving landscape by prioritizing customer retention and expansion. And we've talked obviously about how and why we ought to do that. Customer expectations are rising. So think, mobile first and omnichannel for starters, right? And take the time to really do the work to understand your customers and understand what their expectations are, because your customers' expectations may be very different from your competitors or, someone else down the line, right? A different type of banking institution, right? So important to really get to know your customers. The competition is getting more intense. So I think digital marketing is really a tool that's going to solve for both the evolving customer expectations and the competition rising as it is, right? I think the third one is around the framework. I think that framework equips banking leaders with the insights, more importantly, actionable insights to effectively deploy their digital marketing strategies. I think KPIs and metrics are important to track in order to monitor your performance, and to ensure that your marketing efforts align with the business goals and your desired outcomes. And I think I'll just kind of wrap it up with one last one, that the roadmap that we provide in this report, right, the very comprehensive roadmap, supports that role of digital marketing in fostering long-term customer relationships and really driving business success. So I think I'll leave it at those 5. But like I said at the beginning, I think there's certainly more takeaways than that.
See, Annette, if I were to summarize that, you are essentially saying there is a framework for digital marketing which would enable people not only to meet their financial outcomes, but it will also substantially change their customer experience and the brand promises that they have, because it has levers to act on all of them.
Well, I think the framework will help to, and as Ashutosh mentioned, bring that brand promise into that framework. But I think the framework that we have, that roadmap that we have as well, will help banking leaders to not only deliver on customers' desired outcomes, but then also the business goals and desired outcomes for the business.
Thank you. Now, Ashutosh, we saw what has driven towards that framework and how that framework is comprehensive in terms of meeting those business objectives. I really wanted to also ask how adaptable it is for a given context of the bank, and what could be the typical scenarios that it can actually handle.
Absolutely. Now, as I mentioned, every bank would have a unique profile in terms of their focus. So at the outset, let's say if the bank is far more focused in the retail sector, then in terms of the mix, the way we have proposed, they would automatically have to have a far more focused approach towards influencer marketing, social media marketing. CX personalization is common to all. That's a must-have in the banking today. So I'll not call that out explicitly, but beyond CX personalization, social media marketing and influencer marketing will be far more important in retail, versus if it's a corporate focused bank, then they'll be far more focused on account based marketing. And if it's wealth, then be far more focused on content marketing, which is not just promotional, but also educational and something that builds trust and trust in the expertise for the wealth bank. So these are the nuances which one can talk about as we go along. If you follow the framework, you would arrive at this, and not just in framing it this way that this is important, but rather arriving at a specific percentage allocation of budget for content marketing, for social media marketing, for influencer marketing, for account-based marketing. So it's fairly adaptable in terms of if you are clear about what your brand promise is and what your priorities are, then from the brand promise and the priorities, how do you arrive at these budgetary allocations and mix? It is very customizable. In fact, one of the examples I could quote is in the white paper, we have laid out how through this framework you could, for a particular bank which has a challenge with the drop-off rate, that they are seemingly able to attract a lot of visitors to their website, but not are able to convert them into an engaged client or an engaged prospect. How all of this could be followed on to get into a mix which is far more focused on web and app optimization, content marketing, social media marketing, and CX personalization. And once that's achieved, how all of this could lead to a $3 million outcome within 6 to 7 months of implementation. So we have kind of shown in how this could be worked out in a very niche use case as well. And we have also called out success stories like BBVA, where they have crafted a digital sales model, much in the similar fashion, but without the access to a detailed mix framework that we have proposed. And they have managed to achieve a 41% reduction in churn through a holistic approach. So what we are proposing is not just the holistic approach, but if you have additionally a customized mix being crafted through a framework, how better the outcomes would be.
Yeah, very nice. Ashutosh. You're essentially saying there is enough proof that the framework has delivered or the holistic approach has delivered. Let's improve upon
Yes,
it and see what best we can get to. Absolutely.
absolutely.
Absolutely. And at this time, this might be of much more value on that score. Now, Annette, any closing remarks?
No, I think the big thing is to really take a look at this framework. Take a look at what it can do for you. Ashutosh did a great job of explaining how adaptable it is. Take a look at some of the examples, brand examples that we've given in this report that really drive home the importance of, a successful or a well implemented, a well executed digital marketing strategy. Because when we tailor those strategies to fit the unique needs of each of the sectors, that we talked about, the corporate, the wealth, and the retail, what we're doing is looking at, or we're seeing evidence that digital marketing really plays a critical role in, fostering those long-term customer relationships and driving, the business outcomes and ultimately business success. So I think those are, I think for you, the audience, you're going to love this framework, and it's going to become an important piece of your work and your strategy going forward.
Thank you. And Ashutosh, you have a closing remark?
Yeah, just one. Again, I'll try and go lateral in my examples. Don't mind. But as they say in case of law and application of law, right, that justice should not be delivered; it should be seen as delivered. I see that in case of digital marketing as well, communication should not be delivered; it should be seen as delivered. And what I mean by that is just communicating and having a broadcasting approach to your rich content and thought leadership may not help as much as having a far more nuanced approach to how to craft that content, how to reach the right audience in the right channels at the right time, and in a way which matches up to your unique identity. That will have a far more lasting impact and a pronounced impact as compared to you, broadcasting, your access, your presence, and your offering. And this is what our white paper helps banks achieve. So as Annette said, there's a lot of content in there, a lot of recommendations in there. It'll be wonderful for anyone to go through and possibly give us feedback as well, so that we can always improve on the next time.
Thank you. Thank you, Ashutosh, for that. Yes, many people, the marketing is intended for the customer, but they put themselves first before the customer.
Yes.
The communication is largely about them than the customer. And it is time that they reverse and look at it from, everybody says, I look at it from a customer perspective, but they are more interested to push their products or services without the context of the customer. Very nice. Thank you so much for this.